So, Mike, do all DSCR lenders have the same rules and guidelines, or is there like a universal rule they all follow, or is there some variation?
No, not at all. Because unlike Fannie and Freddie, the regular traditional loans, which all fit into a computerized box, put it through, and the computer tells you, and they go by all the same guidelines, FHA, VA. DSCR is really regulated by a couple different big investors and what they like and what they don't like. So a lot of investors will only do 1 to 4 units. Some will do condos. Some will not do short-term rentals. Some will have different loan to values. So putting that simply, no, they're not all the same.
But there is a lot of variation.
There's a lot of variation. There's a lot of lenders who only have one product. So you either fit in their box or you don't. There's lenders who are a little more adventurous, let's say, who are doing commercial. They're doing non-mortgable condos. They're doing rural properties. Are they the same? No. Do they look for the same? No. And are they priced the same, which is very important too, the same? Because we could see in DSCR loans when you're shopping around, looking around, so that's what this is all about too. You should look around, shop around, especially if you have something that's a little unique, maybe a smaller loan, maybe rural loans or above 5plexes, which are larger loans. Shop around, look around, because you're going to hit 1 or 2 that are going to say, no, we can't do that. We only do 1 to 4 units. That's all DSCR does. But the truth is there's lenders out there who will do mixed use, meaning there's part commercial, part rentals. There's lenders out there who will do DSCRs on portfolios or on 24plexes.
Dang.
Or even bigger. Are they all the same, and do they all run by the same guidelines? Now, another example, some will do 1 DSCR ratio, one needs 1.1 to get their best rates. Some will go down to 620 credit score, and some say, no, 680 is my lowest. There's so many different options out there. There's so many different ways. I mean, I know there's the box where 60 or 70% fit, which means you have a 700 credit score, you're under 75% loan to value, you have a 1 to 4 unit. Then it's just really price shopping and seeing what's the best for you.
So those things you're just saying, those are kind of that is the standard mold, but it doesn't mean that there aren't many that deviate from that.
Exactly.
Like there are plenty of lenders, it sounds like, that will do, more than 4 units, that will do under, like you said, 680, even 620 credit score.
Yep.
So don't listen, is what I'm hearing you say. Don't listen to those that say, what, you want to do, something different than that conventional mold? Because that's not what DSCR does. That's not true. There are some lenders that do it because there's variation. It's not like Fannie and Freddie that are like pretty much universal.
Yeah. There's people who have vacant properties because they either haven't rented it yet or it's just in the middle. And some lenders will go, no, we can't do anything on a vacant property. There's people who will do short-term rentals, like VRBO or Airbnb. There's some lenders who will even do the room split pad rentals or whatever they call it now, where people are just renting rooms long-term. There are so many varieties right now, and each property is different, maybe because of where it's located, what it is, especially if it's rural. There's only so many lenders who will do that. Loan size, some people have their minimum loan size 150 or 300, where other ones are 50. Just understand there's so many different options out there. And if you're looking, understand that not only pricing is different, but also some of the rules and regulations that lenders are looking for. And that's why for us, like at the cash flow company, we have somewhere between 7 and 10 different places to put DSCR loans, because not every DSCR loan fits in one lender's box.
So knowing this about DSCR, you've made the decision here at the cash flow company to have different places that you put them.
Correct.
So that you can work with that variation instead of being one of those that's like, no, it's only this way.
Yep. We're doing a portfolio right now where the person has a 12plex, a 4plex, and a couple single families. So typically when you get above a 4plex, there's lenders out there who's like, yeah, we could do those, but we can't do any of these other 2. And the borrower is just like, I just want one loan, one place.
Yeah, keep it simple, right?
Yeah. So for us, it's kind of like finding the lenders who do all of those kind of things, because each investor is different. Each property is different. So you need enough choices for them to make sure everything works.
So it can be done. You're like, we're doing it right now. We've got this client that has a 12 unit, a 5, and some single families.
Yep. So there's
mixed the portfolio.
Yeah. It comes around a lot. Just there's we have a person right now who's doing 3 single families, but they're all different. One's like a pad split kind of thing where they rent each room. Another one, he's taking it out of a contract for deed. So there's like different uniquenesses. And some lenders will be like, no, we can't do that one, or we can't do that one. And it's really like for them, they just want one loan or one lender to just get them done all at once. When you go to lenders, it's like going to banks and they just say, no, we don't do that. No, we don't do that. Can't even be done. You go to the next bank and they're like, yeah, we do that all the time.
Gotcha.
Make sure you look around, shop around, and find the ones who can help you with any kind of project you have going on.
Yeah, that makes sense. And if they want to learn more about this, where would they go to talk to you?
They could reach out to us at thecashflowcompany.com. We have a great YouTube channel too, or they can just email me at mike@thecashflowcompany.com, and we'll get right back to you. Run through some numbers. Different than a lot of people, we don't pull credit right away. We just tell us your credit score. We'll give you pricing based on that. Most people want an app and credit and all these other things, and we're just like, hey, let's just get them what they want so they can make a decision before we start affecting everyone's credit and time and everything else.
Gotcha. So you do soft pulls and then give them that.
We don't even do that just for a quote, because someone calls us and say we have a 680 credit score, we have a 780.
Oh, you just plug that in.
We'll just plug that in, saying we'll trust you, and here's what we could do at that. So that way it's not going to affect anything that they do.
Gotcha.
Cost any money. If they want a quote, let's give them a quote without making it too hard.
Yeah. I'm sure that's appreciated.
It is. It goes over well. Like being able to talk to someone, get what you want, and be able to fit in different boxes instead of just one box.
Yeah, that sounds really convenient. Well, thanks for talking today.
Perfect. Thanks, Michael.
Yeah, see ya.
See ya.